MMTs. Today's a nice day. It's 9:40 a.m. Pacific Standard Time. Today's date is 4/14/2011. And we're in earnings season. And we have a bellwether called Google coming out today after the close. We have given a lot of coverage to Google, and it appears that a lot of the other bigger firms have come to an agreement with SMF as far as our analysis appears to be the same. They're going to report, and so we made a high there today. Then they slid the bid like they always do. One of the things about the earnings as we understand it is that we understand that R&D is going to be higher, headcount. Google's growing and expanding. So there will be an impact on the top and bottom line. However, when you look at inside of the financials and the chemistry of it, is that one has to come to the conclusion that that's expected and anticipated, because it is. I mean, we've been saying it for many months, and we have the live videos to prove it. And, well, the live analysis and live trades. Nonetheless, an inline quarter will be enough to gap this thing. And I'm not going to say any more than that. What we are going to see is the consistent money flow that has been going into Google, meaning the bigger money has been buying it, and the public Wall Street tape, because they have. And over the last 13 days or so, there's a billion plus money flow that has been accumulating the name, because that's what they've been doing. And so therefore, even though that the economy has contracted in the first quarter of 2011, because that's January, February, and March, those are the earnings that are going to come in. And there are lots of various different analysts and people who have views about where the revenue stream is going to be. SMF has clearly said in its private reserve video that those earnings can go higher to offset the higher cost that we'll have. And I mean, there's going to be an impact to the cost, but that's good, because that means the company's growing. And Google's very innovative. Their product line is a next generation product line. And those earnings, quarter over quarter, are going to improve and keep going, because there's going to be another, like I said, next generation of profits. From the way that the company was originally founded by those two very smart, bright young men, is they are looking outside of the box as to where that next generation of revenues come from. It's kind of like, okay, well, starting a company over within a company. So Google's done really well. They control the market share. We understand that. And they have, long before they came public. We were watching them. The thing that I want people to understand clearly is the next generation of profits, because that's a thing that most people can't see. And what I mean by that, they just don't quite know what that is really about. Well, we're here to tell you, MMTs and our worldwide investor trader network as well, is this is the one. This is the one that will have the next generation of profits. It's cheap. It's undervalued. Outside of the current environment, high gas, high oil, you name it, high food prices, going to hurt the consumers, going to do all that. We already know that. However, the innovation and the build out will still remain the same. And the profits will be able to stay elevated because of that second generation of profits that will come into the copper for Google, is that the earning multiple will be extremely good, because it will. So we understand that the actual reporting process today will be, how does the street handle it? Well, the public tape, they're very schizophrenic in their decision processes. So we do know that there's going to be quite a knee jerk. And how are people going to accept the numbers? And what do those numbers really mean? What is the reality of it? Okay. So the bigger money that understands it, well, they've been buying it because they do understand it. Whether they understand it through their people they have that work for them, expert analysis is what we call it. That's standard. Our analysis is the real deal because we look at it from an intrinsic wholesale value. And we look at underperforming. And Google has underperformed the S&P 500. Google's underperformed the Nasdaq 100. And Google's underperformed the comp. And Google has underperformed the S&P 500 because it has, relative to where the markets are in 2011. There was some very nasty articles that were presented by the bears, however, and the bears and the FTC and the antitrust and all of these other things that people manufacture. A lot of people that are short the name, well, they can just, put a real negative tone. So we have heard a lot of chatter, positive chatter, which also confirms the SMF analysis that was done a few weeks ago, and even beyond that, though, naturally, ever since it's come public, we've been doing it. And this is our 9th quarter. Out of 9 quarters, which is 2 years, that's 8 quarters is 2 years, and this quarter is, we have always bought and sold Google into the earnings. There's only been 2 quarters. The October quarter, when it popped $60 gap, we held that one. And now we're holding this one. This is number 2 out of 9. The other quarters reporting sessions is that we had picked where Google was oversold and bought in anticipation and sold and exited with profits prior to their reporting. And each time it paid very well. So the street had lost some confidence in Google, because they did. I mean, at the end of the day, they did, that big money did lose confidence, because they did. So this time we're holding. But we're holding wholesale valuation. That's one of the things that we have to be clear on. Because it is at this price level. It's wholesale. That's why we're in it. And that's why we're holding it. So, outside of we're in a bear reversal in all the indexes. We're in a stage 4 category. In the SMF category, stage 4 is a double bear reversal. So we had that one bear reversal on stockmarketfunding.com on the home page there. We called that short there. We re-leveraged back up. Stage 4 is always like maybe a blow off top and then another reversal. And we're in it right now. We're in that reversal again. So really, going into this particular earnings, Google is in a particular market and a particular current environment, a current bear negative sentiment environment for one reason, because right now everyone is feeling the pain of that gasoline charge and high energy and whatnot. So the bulls starting to get a little like, oh, I better wake up. So Google's in that element right now in this time frame. However, our positions do go out further. And because we're wholesale to the market already, we can withstand volatility. Because we know in the end that they're going to execute. Because they are. So there is a pro and there's a con. The con is Wall Street. How the perception and the big money treats it. What the knee-jerk reaction is. We always see in the SMF platform how wrong the public is. So that's why we know that Google will continue to go higher in this environment. And even though that we're in a double bear market reversal right now in all the indexes, Google can outperform because it's been underperforming for quite a while. So therefore, it can outperform the indexes. And so once again, this is a special stockmarketfunding.com special that we give to the public as pro bono, so that people can clearly understand the value of what we're talking about. It's very important that one understands truth and value, because without those two components, you're never going to go nowhere in this business. And I'm going to conclude this video right now.